A third of all Bitcoin hasn't moved in more than 5 years, which is an absolute new record for BTC. When Michael said that on the podcast today, I thought to myself, this will result sooner or later into an absolute supply shock coming towards Bitcoin. Additionally, we both think that the bull runs we had after 2022 were not the same as before. They were not as violent as they should have been. So all of that makes Michael and me think that there's a lot more upside towards 2026, 7, 8, 9 coming in this upcoming long multi-year bull run. Enjoy. How's it been for you in this bear market? And you have worked before already in bear market. How was the comparison for you to maybe, I don't know, 2022?
Yeah, I think there's two ways to isolate it. There's from like building a business, and I'll park that one separate versus like just market sentiment, how investors, how individuals participating in Bitcoin are feeling now. It's obviously easier to say it today versus looking back at call it any time before 22 bear market and prior. But this one does definitely feel like it stings a lot more. And I think it is different. And I think there's a lot of things. I think that there's a component that we never got on our organic bull market. And so this is kind of an inorganic bear market as well, meaning that without putting tinfoil hat, like there are a lot of mechanisms at play that have this price pegged to the 60, 70K band. And you can see this like empirically from, I believe they were showing one of the charts with the rainbow that's showing like below a certain average. And it's just like never been there in Bitcoin's history. And then an example of how we never got the proper bull market was if you looked at on-chain activity in 21 in the peak, I believe it was like close to $50 trillion that the Bitcoin network settled in an annual basis. And the 25 peak was about half of that. Right. So we doubled in price, but only half the transactions. There was just less activity, less net new buyers. Nobody heard their peers coming in and coming in the space. And so you take all of that and you take the saltiness of, Bitcoin getting everything everyone wished for the first 15 years when it comes to clarity, administration, ETFs. And so you take that and then you take the thing that, and there's not a silver bullet, it's just painting the picture. Then you take the notion, and others have talked about this, but it's this realization when the price was up and down historically in Bitcoin, everyone was on the same team. And so you're getting rich together and getting poor together. Well, as this market has taken shape, there's different kinds of Bitcoiners. And there's like the people off on the side, they're just buying ETFs. That's fine. But the more advocate or louder folks is like on the DAT side, right? So digital asset treasury. And there's a lot of people that are overexposed or have more exposure there to no Bitcoin, right? And then there's the Bitcoin side. And not to continue, but like the other thing is naturally these Bit wars and the forks. So you take all of that, and it just makes this one feel a lot more acute and painful. I will say though, from working in the space prior, that the bear market always accentuates and like pulls out the worst of what's going on. Whether it's I can't say from an individual perspective, but definitely from a business perspective. If you have a business that has warts or has certain internal issues, the bear market will naturally pull those out. I've seen this firsthand because and this isn't necessarily like isolated to Bitcoin. You can put this across any kind of technology wave and investment cycle, that when you're making a bunch of money and you have a lot of growth, everyone's happy. But the second that adversity hits, then everyone kind of shows their cards. And so I think that's another aspect that you see at a business side. So that's how I think about it from the individual side. I'll pause there. And I mean, I can talk about the business, and I hesitated bringing the business up first because the opposite has happened for us on the business, and I feel very blessed for it. But I don't want to lead with like right now, well, everyone's a little bit on ice given the Coldcard stuff. Am I selling Bitcoin? What's going on? But we've actually benefited a lot from this, and I could share more, but I'll pause.
I 100% agree. You said also something right in the beginning that I wanna touch on. You said the rally after 2022 never felt that it was really going. Feels to me also like that. It's weird. It's like we had this 2024, we had the 100K, of course, that we broke. We then reached to, I think, 126 or something like that on the height, but it never felt crazy. You never got immense amounts of calls from newbies. You got some, but like never like crazy amounts. The same way I got it in 2021 or before already. How do you look at the past years that we had to rally up, but not really getting going?
Yeah, I mean, I can go deep, but there's like five key anecdotal pieces that I can explain why we never got a proper bull run. But independent of that and like the empirical evidence, the best way that I can describe or really talk about like what a proper bull run is, if you can, is it has to do with reflexivity, which is just volatility, right? And so when you think about traditional bull runs, and you see this independent of Bitcoin, when you think about like Robinhood stock or AI stocks, that volatility and that reflexivity where it's kind of like supply meeting demand and the price moving, in the price moving substantially in short periods of time is what gets net new people into the trade, and it gets the internet webs buzzing, and it gets that, and then that further has more reflexive nature to then continue to drive more people, less float, higher price, and it goes until it hits that blow off top moment. And I can't pinpoint if it has to do with institutional. I think if I had a direction to say, I would say between the ETF, MSTR, there are ways from options and to dampen the volatility. Because if you remember, okay, so you go back to 24 and you think about how did the price move? It was very methodical and like almost like going up a ladder. It was step by step, or like up to stairs, like step by step. And so while the price was moving, the people inside the industry, if you put your mind back there, were talking about it and excited. And of course, CNBC always likes to get clicks with Bitcoin, so they covered it. But it wasn't the thing that you saw, like you saw at 21 with the FTX stuff previous to blow up, where all the different firms had the sponsorships. It wasn't like 17 where people were putting blockchain on the T on the blockchain or whatever. So you see where I'm going with this, that reflexivity, that volatility never was there. It was kind of dampened, and that dampening didn't bring in net new people. And that's why we didn't get friends, family calling us, but also where we didn't get the high that we thought, but we're also not getting the low that you would expect. You remember what I said? It's like we didn't get an organic bull market, so we're getting an inorganic bear market, meaning that, and you could see, I mean, you could feel it with the price kind of pegged here at like 64K. And a lot of these things don't sound like, they sound, I don't want to say conspiratorial, they're not popular to talk about, but you can just look at the market. Everyone feels that something feels a little off. And the only other thing from precedent is like gold's been manipulated for a very long time. I'm not saying that can be manipulated for a long time, or there's, I think that there's other things in play, whether it's clarity and institutional, firms getting their plumbing added, Schwab turning on next year, BNY starting to do custody. But the point being is that there is other things at play, and we've seen this at gold. And so that's where the kind of like reflexivity from 22 onwards I'm referencing.
I'm not an on-chain expert at all, but you can clearly see it if you look at a C-score or some volatility indexes, or like where we should already be in the market. We should have, and I really don't want to talk about that too much because I have no material knowledge in that. But we should have traded higher, and we should have now traded lower compared to like the all-time high. We see kind of this dampening in volatility. We kind of see that we have less outraging highs, as you said, as you described also, and now it's holding up pretty nicely. I think the 58K or 57K, I, I, I like the 58K as the bottom. I think if you really look at it, it's like 57 point something. That is the low point. Now we're at like 60, 64, 65, whatever. At that new 58K gang thing. And I
I will.
think, yeah, go
Okay.
ahead.
Well, I was going to say the one thing I will. Sorry, I'm like you. I don't necessarily hold a lot of stock in the on-chain stuff. I think a lot of it can be manipulated or gained when you see like going onto exchanges. But if there's a stat to call out that I do think is worth referencing here, and it's not necessarily apples to apples, but something we posted yesterday, a third of all the Bitcoin has moved in over 5 years, a record high, and it's continuing to increase. So 33.6% of all the Bitcoin in existence hasn't moved in over 5 years, and it continues to grow month after month, year after year. And I think that's incredibly important because obviously it's probably higher than that given, the amount of lost coins. But the main point is that that's that holder base that reduces the float because they're not selling. And that's effectively like when you find that bottom and then you continue to go back up. And that also ties into the self-custody kind of like moving off exchange aspect, because the rational thing is once you get to that conviction where you're not selling for 5 years, well, then you need to make sure, right? Like think about somebody that didn't sell for 5 years. Fairly confident a lot of those assets, majority of them are not on an exchange. Because how can you in good faith know that the exchange will be there in 5 years? That's the thing that I think a lot of people miss on the exchange side and custodians and ETFs. They're really sitting like, high on their horse right now because ETF flows are growing and they know what they know. But I don't think they deeply understand that once the investor base gets educated, the ETF isn't the end state. And that's the thing that TradFi doesn't fully grok is that like their ETF flows when they usually think about it as somebody buying exposure to some equity and diversifying their portfolio. It's not a type of asset that people realize, oh God, maybe this is the last trade and I want, a larger percentage. And then once you get there, it's doesn't make sense to leave it on a third party, exchange. And then the other thing with the ETFs is like if you're going to go into a third party custodian, why would you go into an ETF? You're just increasing the number of layers between you and the Bitcoin. Just go to the custodian directly. That's already risky, but at least you have direct title and assurances versus you're just behind the paper claim. And there's a lot of language in that S1 document that doesn't protect you if anything were to ever happen to the ETF's holdings.
Yeah, I don't get, like, other than you can't physically get any other exposure to Bitcoin, I don't get ETFs. Like, I haven't gotten a good argument of like why to buy ETFs other than that, other than you can't get it in some, I don't know, pension fund account or anything else.
There's a very strong reason why, right? Like to be fair, a lot of this stuff is just nuance that like, when you think about all the people in the world that aren't like us, that didn't go down the rabbit hole, they heard about Bitcoin multiple times from multiple family members. What wealthy people don't want to do is this term catch a falling knife, right? So like whether it's, you can think of Amazon in the 2000 crash or whatever it is, like March 2020. Really good investors can manage their psychology, but there are very few. That's why most people shouldn't invest. They should just buy Bitcoin. But the point being is that very few people can manage that. So they don't want to catch on the fall, on the low. They'll wait till it picks back up and retraces. And they'll be okay with losing a little bit of that to get, that clarity that we're back in the uptrend. So take that analogy, that mental model. And that is what exists for most of the wealth that exists in this world, right? Think about the boomers, the equity markets, all of that. Those people have made significant wealth. They're not trying to get rich with Bitcoin, most of them, right? Directionally. So they don't want to catch a falling knife. And to catch a falling knife in that analogy is think about what you have to do to go and buy Bitcoin. This is something I had to learn because I was stuck in this like thing of like, well, it wasn't that hard. I went to like X and then bought it and moved it to Y and then moved it to Z, right? And then figured this out. It's like, nobody really wants to do that, especially with wealth that has a kid and a family and a job. So their version of this is, and this is where the ETF demand soaked up, because imagine you're working with Goldman Sachs, BlackRock, Fidelity, Charles Schwab, and you have your brokerage there. And you've been looking at Bitcoin because your kid's been telling you you've been wanting to buy it. But if you want to really go and get it, you have to at least understand some of this. You have to liquidate a position of your stock. You have to get the cash. You have to wire it to a third party exchange. And we think of Coinbase or River or whatever it is, on ramp, as like reputable. But to them, it's like going to Bovada or what, you know what I'm saying? Like it's just a janky, random area of the internet for one sector that's catching the falling knife. Because do they go there? Is it regulated? Is Bitcoin regulated? The second you can buy it in your brokerage into an ETF and not have to deal with any of this, and then you get BlackRock, and I'm not saying it's right, I'm just saying this is the logic, and then you get BlackRock behind it, the largest asset manager in the world, and their assurances are there, and you click a button, that's what people will do. And that's where those flows came in. So that's why we will see it persist. But I think of it as another level of a much greater level than Cash App, right? Like Cash App's an easy one because they're great, love them. Most people may get some gifted Bitcoin, buy Bitcoin because they have the wallet, but nobody's buying their 500K or $2 million on Cash App. They're getting their taste, they're learning, and then they go to somewhere else where they can log in, they can figure out custody. And so I think of ETFs on a much greater scale than that, is like very, wealthy people start there. And as they get educated, they increase their position to a certain point. Then the game theory kicks in of like, wait, what do I got here? And is this actually the best vehicle for me to express my, my thesis on this asset?
The entry point,
Yep.
people coming slowly towards Bitcoin. That's why I think might be controversial to say, but most of the fiat instruments that help bridge capital from the fiat world towards Bitcoin are net positive towards Bitcoin. Even if they fail, even if it's not successful, I think getting capital towards Bitcoin in whatever way possible is always a net positive over the long run for Bitcoin. There must be so many. If you think about what Bitcoin really represents, the revolution behind it, we will have a lot of way bridging from what we know as the traditional financial system and where money currently sits towards Bitcoin. Like if we think about, if people call for like $1 million Bitcoin, $10 million Bitcoin, that's a lot of wealth that has to move into Bitcoin, that has to move somehow into Bitcoin. And it's a little bit almost naive to think that all of that wealth will just come by people waking up and opening an exchange account and getting the hard wallet and just moving there. I think that takes a lot of like on-ramping, that takes a lot of bridging, a lot of financial instruments that we need to get there.
Yeah, I mean, I don't want to go too far down the whole rabbit hole, but like I think that's partially right. I think like when we look at nothing new under the sun, think about like gold monetizing, right? And like it's really beautiful when you think about a commodity money coming from the ground up, bottoms up, right? It was never going to happen any other way. It's really elegant that we are the most sophisticated individuals in Bitcoin, that 50%. Because you think about Bitcoin monetizing, individuals had to figure it out. If they're still holding it by nature of still holding it, they're the most sophisticated because they didn't get rugged in all the different things. And so the crazy part for us and TradFi to realize is that we will continue to be the most sophisticated because it compounds. You don't just get to step in and be a traditional financial player and say, now I understand this and now I can adopt it. Right. And so that's where it gets interesting on the comment when we started about on-ramp. It's like we've had all this time to build all this plumbing while the market's been quiet. And so that's been the benefit. And that's why we work with the most sophisticated folks. And we look at it as like flows coming from ETFs, Coinbase, self-custody, because they see this as like the end state of financial services of what we do. But with all that said, if you go back and you just like try to imagine cavemen or whatever, farmer town thousands of years ago monetizing gold. Like gold didn't come out as like this nice bar or Kruger in, right? It was like a rock that was lumpy and had a bunch of other things on it, and somebody liked it and they were trading with something else that somebody was using as money, and then somebody shaved off some of that like nastiness on it and got a little bit more gold and they traded it. The rational thing isn't that it had to go and get like looped into a bunch of other products that existed at the time to monetize. It was more and more people parking more of their wealth, their land, trading it for that. And so there is a large fallacy being told out there that we need these bridges that are effectively like in my view, like it's not, filth isn't the best word, but you're effectively distorting the underlying. And that's not how institutional allocators or very smart people over time will want their wealth. They'll want the spot thing, reduce the counterparty risk, reduce the layers, reduce the execution risk, reduce the assumptions. And so there's a narrative out there that a lot of these things like need to be parked in equities and all the craziness. And it's just not fundamentally true. And I know you love him, but God bless, Parker had a great tweet yesterday. If you look on his Twitter, where he was referencing, Seyr from 2010 said, or 2013, he was referencing like this whole Bitcoin thing, like it's not going to work. It's for gamblers or whatever. And it's like, so you take that, and everyone can be wrong about Bitcoin. That's not the question, right? Like everyone can, learn. But the question I would ask, it's more rhetorical. You don't have to answer it, but it's like, how can somebody be so wrong about it and then be so right? So is he right or is he missing something? That's like, it's just more rhetorical. It's not less that there's a right way, but that's like an interesting mental model to play. Like to go from being very wrong to getting it, everyone has to go through some level of that. But being that wrong to go into the other side and be like, oh, I got this. This is how we're going to do it. Is just an interesting like thought experiment.
Yeah, I think that, how do I tackle that? I think that we don't really have so I think the end product should be Bitcoin self-custody. I think that should be the goal of every single individual, to have most of their wealth in Bitcoin and self-custody. I think every single company should also strive to have Bitcoin and self-custody as much as possible. I know for company it's probably more complicated than that. On-ramp is, I think, probably really cool for companies to build self-custody setup in different ways. So I think self-custody Bitcoin, and I'll make that very clear because I post a lot about strategy these days, but I always have to make that point so people don't misunderstand me. I have way more, like a little bit more than 80% of my net worth in Bitcoin self-custody, because that's what I believe is the essence of Bitcoin. I just have 20% of my net worth gambling on strategy, not like 20%, 10% cash, 10% strategy. If we are if I'm like fully honest, so it's like if strategy goes to zero tomorrow or completely bankrupt, I'm crying, but I'm still okay. I'll admit defeat, and it's fine. I don't think, and that's I think a very important point. I don't think strategy is necessary for Bitcoin. I don't think Bitcoin needs MSTR or SDSC or any other treasury company for that matter at all for Bitcoin to succeed. The other way around is the case. I think strategy needs Bitcoin to succeed. They found the lifeboat. They found something that makes the company a lot more valuable. Think about strategy, the company. If they didn't put money into Bitcoin, it would have been now a company that's like 1/20th of the size or something, like maybe less than that, because the business model, like the operating business model, is not that good anymore, even though I don't dive too deep into that. So I think that's very important to say. But I've said more with like the bridges, more the ETFs. So like I think that's more the thing that we need, more of the where is capital parked currently. Also, bridges can even be financial advisors. I was shocked to see how much capital is controlled just by people advising other people where to park their capital. It's astonishing to me. I view that even as TradFi, of like, we need to onboard them to say, hey, you need to have some Bitcoin allocation, you need to get some Bitcoin. So I mean with bridges, not just like stretch, but I mean with bridges just where is the capital currently parked, who's controlling that capital, and how can we bridge that capital towards Bitcoin somehow? I mean, educating financial advisors and doing all those things. So I think that's I think that's very important to understand.
Yeah, that makes a lot of sense. I think the specifically on the advisor stuff, like it's all the world's capital, right? And like it makes sense. I didn't fully understand it, but when you have a financial advisor in the old world, 60/40, assets are volatile, people have human nature. Like a financial advisor, most value, my understanding is around human psychology, right? Because markets are volatile. You like help them stick to a plan, retirement, and people want to do X, Y, or Z when we just see that they're not good traders. They shouldn't be managing that. So they get that support. But the interesting aspect, the bullish aspect for Bitcoin is in the same way, in my view, it's not exact, but in the same way how most of the camp says it's either self custody or third party, is a similar view of like where financial advisors and TradFi's group think is it has to be equities or it has to be bonds. And anybody that goes down that rabbit hole, specifically bonds, right, are just cooked. But then even if you go down the equity market, like you can go to the past 30 to 50 years and gold has outperformed the equity market. Just holding gold, the pet rock. Well, why don't they explain that? Well, it's because there's level of groupthink, and a lot of that groupthink has to tie really to their personal and their career balance sheet. Because if you go to the Schwabs, the Fidelities, the BlackRocks of the world, how much of their assets, tens, 50, hundreds of trillions of dollars, are tied into portfolio managing these products? And so the angle or the opportunity is that until that shifts, and it's all game theory, right? Because why did Morgan Stanley, Goldman just bought an options ETF? Everyone's churning on some level. It's not because they want to, it's because their clients are demanding it. Remember, this is a bottoms up retail phenomenon. So they're turning it on, but they have to manage all of that legacy inertia. So if you imagine a world where a financial advisor or a group made the concerted effort for the next 2 years to explain inflation, what it is, debasement, bonds performance, equities performance, especially on the risk profile of like the level of their trading compared to multiples and historically, you'd have probably, that whole in total, maybe 10, 20, 30% of a portfolio move into gold and Bitcoin. But it's not there yet. The system's not there yet. Imagine that those assets have to be sold, right? The market clearing price for them to get out of that. And so now you have a system that starts to, recursively go downwards, and you have to print more dollars. So that's the end state no matter what. But I'm just explaining, like, you're right that like the bridges have to exist. Different firms will bring them on because they will be competing with other firms. That's the beauty. There is some level of free market as part of this. So everyone's trying to get ahead of the others. But that's also the opportunity why Bitcoin only sits at 60K is because there isn't a concerted effort from where the money sits to tell this story, because if it did, it effectively is existential for the way the existing system is set up.
It's a good segue into something that I actually actually wanted to start with that, but we'll go to anyways. I think Bitcoin at 60K, I have that weird feeling that we are right at the tip of a bull run. And I don't say that because I get a lot of positive signals. I say that because I almost got only negative signals. And so I'm like, I don't know if we have that much room to go down on. Again, not an on-chain guy, not a trading expert. I have just like a gut feeling of we've experienced a lot of pain, and I feel like we're ready and right at the starting point of this bull run again. Now I've said the same thing on February, so I was massively wrong, like half a year ago. But is there something that you also look at of like we're slowly seeing the light at the end of the tunnel? We're slowly seeing the green candles, the bullishness, the forest, the spring, whatever you want to call it, coming back towards Bitcoin.
Yeah, I mean, I'm like you, right? I think the problem with if we're always bullish, they were always bullish, so we always think that that's upon us. And I didn't think we would have this kind of year. So that's the caveat in saying that, what do we know? But yeah, I definitely agree. I think that there's been an insane amount of pain, and the crescendo moment has been the past couple weeks. And I still feel like we're kind of in the eye of the storm there, because you had the Coldcard issue, you had the Trezor leak, you had safe Safe Wallet, I believe, that had their data breach. I think another one came out yesterday, or Bitbox came out with a vulnerability that I think that where there's smoke, there's fire. This doesn't feel all organic. Like Coldcard's a coincidence. Multiples, it feels a little bit more concerted effort or attack. And I've long said I think there's a lot of plumbing that needed to get in place before Bitcoin could take off. Now I'll eat this because it's very low probability, but I've held all year that the Clarity Act would still get passed. And the Clarity Act is a big deal from regulatory clarity, institutional clarity, because the same thing about catching a falling knife, institutions, some will go out on the risk curve and adopt these products and start to plan, but a lot of firms aren't necessarily ready. And a great example of this is like banks in custody. Banks in custody are the natural place for, people already have their dollars there and they trust them. And banks are very localized when you think about relationships and how you think about a bank and who you use. That even there, they haven't turned on custody because there's still, even though there was like the Genius Act in certain aspects of it, there's other governing bodies. The Office of the Comptroller of Currency is one of them that have to be able to give a green light around what's the process, if there's any capital requirements, meaning if somebody has to park Bitcoin and then I have to park a certain amount of dollars from my bank's balance sheet next to it, because that's not very efficient. So that has been the rules. That's why banks haven't gotten into the custody game. But yeah, I do feel that a lot of this, it's usually like a Q4 is always kind of the move in Bitcoin, and summer's always kind of just naturally volume, volatility, everything kind of dampen everyone's, away from the computer and working. So yeah, I do agree, but who knows?
Do you agree that like volatility is forever slowly going down in Bitcoin? Because we talked about it, like how different the last few years have been, how the bull market felt like slowly going up and not that like volatility thing that we had before 2022. In 2021 we had 2017, I think, was really crazy. It's the first time when I experienced Bitcoin, even though I haven't bought it then. That those days are just over, or that might just come back or be more violent just because we kind of have been compressed these days?
So hopefully this has been okay, because I'm not giving you direct. It's yes and no, right? And it's, in absolute terms, volatility has to go down long term, because if you think about it, it's the volatility exists because there's only so many people that understand Bitcoin, and there's only so much Bitcoin. And as that goes up, that volatility comes in. And then when people get shaken out because of whatever's happening and the price is going downwards, they don't all understand Bitcoin when they bought it. So then they're selling it. And then you have that base of educated folks, and that base is continuing to grow. So that base grows. So there's less people, less capital to come in. So naturally you'd have that volatility dampen. So I do believe that. In the short run, I do feel like the volatility is a little inorganic, simply because you now have different parts of the institutional stack that can dampen that volatility. When you think about ETFs as an example, and then trading around options, futures. So I think in the short run, the volatility is probably being expressed a little bit, not in the way that you would expect, meaning it probably should be still more volatile. But with all that said, I don't necessarily know, with a free floating asset that can be easily verified and withdrawn, if the capital that we expect to come in on this next bull run, which I believe is going to be insane, because I think that part of we didn't get the proper bull run in 24 or 25 means that we get it on the back end of this decade heading towards 2030, that we will see that volatility in both directions. And so I do expect it to be a lot more volatile in the short term compared to the past few years, but then long term, that volatility will have to dampen just because of its monetization and adoption.
Yeah, I think a lot about on how early we are, and I think you mentioned that already, or maybe you said it somewhere else. Unlike we are in the early 70s or early 80s, something like that, and when it comes to like the tech of Bitcoin, but it's also with the adoption side, I feel like we are still a lot earlier than we think we are sometimes. Just because Bitcoin has a good brand name, I think in the Western world especially, most people heard about Bitcoin. And there's those great street interviews that I always like to mention, where people ask them, oh, like, what do you think about Bitcoin, and what do you think is the Bitcoin price currently? And they're so off on the Bitcoin price. Like they don't even know about like the ticker thing that we see way too much per day. And so like how much do they really know about Bitcoin? But they have heard about Bitcoin. And so because the brand name of Bitcoin is already so strong, we have that feeling that we are quite far away and quite far already in the adoption cycle. But then you see how many people on Earth as a percentage have 10% or more of their total net worth in Bitcoin. It's very low. Like how many people really have like a material amount of the liquid net worth currently in Bitcoin? I would guess not that many. I don't know if there are good numbers out there. So this is the one part of like, we're very early in this S curve. We're very early in this whole adoption cycle of Bitcoin. And so if we are very early, there might be a more violent, more like FOMO event where the volatility is a lot higher, and it might be coming back towards like those massive uproars and then like this 80% drawdowns again, that like we had it earlier. But then again, I'm like, on the other side, with Bitcoin getting more mature and bigger, it's getting harder and harder to move. So logically, the volatility has to be dampened. So I'm just sometimes confused of like, we are very early. There's a lot more capital that has to come into Bitcoin, but also volatility is slowly going down. I'm like, I'm not fully getting where this tension is.
Yeah, I think that's right. I mean, working backwards, I think as Bitcoin grows, it's this notion of the larger it gets, the more palatable or appealing it is to more people, right? Meaning like Apple and other large allocators that have large positions of like cash that can go into the asset from a liquidity perspective, and they won't move the market. So you'll just have it. I think it's all like relative, basically. So at a free float of a couple million coins and prices at a couple $1,000s, you have a certain amount of people that are interested. They have a certain amount of capital. But then when you 10x that, you have 10x more people interested. They have 10 to 1,000x more capital. You see where I'm going? So the volatility kind of is all relative. That's how I think about just cycles in general as well. Like with the amount of Bitcoin mined is maybe less, but in dollar terms, it's more. So it's relative in there. The angle, or the way I would look at how early we are to try to paint the picture, is we are so early. I believe this with 1,000% certainty that we're so early we haven't figured out custody yet of this asset, right? Like just think about it. This is like it's so obvious, but it kind of pains me because it's so obvious, but it's not intuitive or understood. Like if Bitcoin is a radical new asset, this radical solution from a technical deal, but from a money perspective, wouldn't there be a radically new way to custody the asset? Because the way that it's custody today in self-custody or third-party custody is how we've custodied assets since we've been humans for thousands of years. You can either hold it, right? You can hold more of the metaphorical bar of gold in your hand, but you can still hold it, and you still end up with all those issues if you take all your gold into your possession. And you can leave it with third-party custodian, but you still end up with all the issues there. And so if you look at it through that lens, well, then what does it mean in practical terms? And the practical term is, okay, so you said the experiment earlier. If you ask somebody about Bitcoin, and they'll tell you, they'll guess the price. And I've done this a few times, and I encourage anybody to test this. Like if you go to the grocery store, it's the easiest. I don't know why, but it's the easiest. And you talk with people that are like younger than you. And I always kind of talk with them because I remember being a bagger when I was like 16 years old. It's the first job, 15 years old, first job you can get. So naturally talk to them, talking about being in that position, dating myself, how old I am, and then saying, hey, what do you think about Bitcoin? I don't know how it comes up, but it has it. And their usually response is, oh, wow, man, like that's crazy stuff. Or like, I missed it. But it's like crazy. They reference it as like insane. It's like speculative. Like I don't mess with that crypto stuff. And then if you talk to somebody else that's older, they'll have another side of it. It's like, that stuff's a Ponzi. Like that's not a thing. And they're not telling you the answer that like what they really believe. They're telling you what every time they open up Bloomberg or Wall Street Journal or Fortune, that somebody somewhere blew up. FTX lost all the Bitcoin. Coldcard lost all the Bitcoin. Mt. Gox lost all the BlockFi lost all the Bitcoin. And so why would we expect them to come in and play in this world if all they know is it just goes bust. And so the mental model to think about is a gram wall, or most pragmatic individuals would rather have negative yielding bonds until their death, a slow road to serfdom, and slowly erode their wealth, than lose it and go off a cliff tomorrow. Because that's effectively what we're giving them. It's like, okay, we'll go figure out the self-custody thing. If you mess up or figure out an exchange, it's gone. Now they don't know all of that, but that's effectively how early we are, that we haven't given them the solution to say like, oh, I can just, and go back to the 70s computer analogy. It's like you're asking how many people own 10% of Bitcoin. It's like how many people in the 70s got on the internet or had a computer. And then you had to commercialize it in a way that just delivered the value, and they got the value, and then they closed the PC and they went back to their life. And they don't have to listen to the pods and go through this. So that's how early we are in the phase that we hadn't figured out custody.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean. No account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io. Tell them you come from Robin and let's mine Bitcoin together. There's this painted picture that self-custody is over. And I see the exact opposite. I think we've learned a new thing, and self-custody will be stronger than ever from that in the long term, even though it's hard to watch people lose Bitcoin.
Yeah, there's a lot there. I mean, I think at the end of the day, Bitcoin, just like life, is anti-fragile. What doesn't kill you makes you stronger, and Bitcoin will be stronger for this. There is probably more, while there was on-chain activity of losses, there's probably more of a psychological loss than anything, because I think a lot of people are questioning. I think it's healthy. I think that for Bitcoin's first, call it, we're going on close to 20 years. There's been a lot of existing solutions and how people have always done things. And I think that we got complacent as a whole when we think about generally the same way somebody custodied the asset, 10 years ago, 15 years ago is very similar today. And so now people are rechecking their priors. I do agree with you that there's, you always have to question the algo. We were talking about it yesterday with like Grokbot. Like Grokbot's very cool, but there's natural gaming there when you see that pop in your feed all day long. In the same way that there's a lot of allowed people that say you should send your Bitcoin to an ETF or into a custodian. And yes, when things were crazy those couple of days, of course you want to protect yourself because people don't know how deep the exploit is and what's vulnerable. But at the end of the day, like A, self-custody is not dead, and B, it's just not rational for large material wealth to go into centralized exchanges. That's the thing that most people miss. Even when I talk with like large institutions and TradFi, they don't grok that Bitcoin is held, at least roughly 50% of it, in self-custody by individuals. And those individuals aren't holding like, 0.1% or 1% of their net worth. They're holding 10 to 90% of their net worth. And when you do that, it's less about ideology. It's just self-preservation, game theory. You need to isolate, segregate that asset from an internet connection. You need to have eyes on it, understand the underlying custody, and all the things you're talking about. So I don't necessarily like, if Bitcoin's going to work, self-custody has to exist. Now, with that said, we also have to have, and the thing where I think a lot of people lack, and there was a tweet I had went viral because we've had a lot of calls with people that don't have peace of mind. And the mental model to think about is there's a reason why grandma doesn't get into Bitcoin, and a lot of people get into Bitcoin. And people often say, well, it's so easy to self-custody. And we found out that's not true. It's easy to self-custody if you're putting $1 on, or $100 or $1,000. But if you're going to put a lot of your net worth in, you have to get really proficient. There's nobody that got into Bitcoin that put 10 to 90% of their net worth in 6 months time because they figured out the right, multi-sig or whatever. It took years. And so we, as folks involved in this space, have to have enough empathy to realize that not everyone's journey is going to go through that, and they shouldn't if they just want to preserve their wealth from debasement. Because that's why I think everyone is here. It's just for people to be able to preserve their time and wealth through space. And if that's to be the case, we shouldn't expect everyone to have to start there, but we also shouldn't require them to go into a third-party custodian, because those have had larger exploits and will continue to have larger exploits. And so I think that's an important discussion of there has to be a third way. And then the last thing is, I do think, I was just talking to somebody about this yesterday in the industry that works at a big firm, and it's just a realization that, think about like when you got into Bitcoin, what year roughly?
2020.
Okay, so 2020, right? That year, prices sitting between 3 at March lows, and then like 9 to 12 at the end of the year. Maybe it went up to 20 by December, January. But the point being is, somebody bought usually probably like in 6K mark. So 6K average price, and you buy 10 Bitcoin, $60,000. Single sig, passphrase, maybe you're okay. Collaborative custody, maybe you're okay. Well, what happens when somebody wants to buy the same 10 Bitcoin today, or at its all-time high a year ago? That's $1.2 million. A person with $1.2 million is not a pleb. It's not us, young guys trying to speculate. It's somebody that they could be maybe trying to speculate, get in, but like, they have disposable income. They're usually older, and you were going to expect them to go and PO box a hardware device and roll dice. And so the alternatives have to meet them where they're at, or they're going to go into a Coinbase and ETF. And in my view, we've talked about this, that's existential for Bitcoin in my mind. So it's a nuanced conversation. Bitcoin isn't dead. Bitcoin self-custody isn't dead. It will naturally have to evolve. The last thing I'll say, though, is it will have to level up. And by leveling up, meaning there will be more complexity for self-custody if you want to ensure that you get it right. What that means is there'll be fewer people that will be able to do it in the future. I know that sounds a little heretical or controversial. We can talk about it. But the core idea is that if an exploit could happen where somebody can't understand the entropy and verify it, which most people can't, then by definition of that, if you want to make sure you're not knocked out of the game, you want to leverage probably multi-sig, because you don't want a single point of failure. Well, as you continue to go down that, you're now saying, okay, multi-sig, maybe multi-vendor, you have configuration files, you have XPubs, you have dongles, you're connecting the internet. You're just, you're having to connect, you're going further, and then this will increase now because there'll be more exploits. And so is it 305? You see where I'm going with this, that it will be actually more and more untenable for more and more of the market. In the same way, it's more untenable for more and more of the market to buy a whole coin to self-custody those assets. That's just the facts of reality. And so now we have to figure out, do we build better products there? I think we will, but we'll also have to figure out other solutions to bring people in that don't get them knocked out of the game, but also don't require them to become an expert.
Yeah, 100%. Self-custody will be, I hate the word, but I think it's in a spectrum. It's not do you have self-custody or not. There's like the no self-custody way with ETFs and exchanges. And then you have on the further down the right side, you don't use any other third parties. You are doing it with your own built seed signer, and you're doing it with like all the tools that you've bought yourself, like you verified yourself and doing dice rolling, all of those things. And there's a lot of things in between of how much trust do you give to people, how much trust if you give to different institutions. And so it's like, I think self-custody hopefully becomes more and more of a what kind of self-custody do you want? Not like this is the right way. Like there's not one way. I'm like, for everyone starting from 20 years old with 0.1 Bitcoin up to like 80 years old with like 50 Bitcoin, they're the same solution. Like there's many different solutions, and then many different flavors of what kind of sovereignty, what kind of self-custody do you want, and what makes sense for you personally?
Yeah, I mean, I'll say something controversial. I haven't used it yet. I've been meaning to. I think there is a one size fits all. Uh, and everyone would say that's the opposite. And I'll explain why. So just as a mental model, because I think what happens is Bitcoin is unique, but at the same time, like there's nothing new under the sun. Right. So we just we redo certain things. And so you can use three analogies, whether it's as LLMs proliferate and people leverage AI, there will be people that set up local models that build, go and get the Sparks from NVIDIA, Max, and they like set them up to run locally, and you'll go further down that curve. Similar with computers. There are people that build computers and build them to spec. And the same way with firearms. There are people that have whole like effective militias in their house and are prepared to defend. But how many people is that the norm, or is that outside the curve, right? And so there are standards when you go across the board. A MacBook's a good standard for, or a PC and how it comes out of the box. In the same way, Claude or OpenAI, and we'll see where it goes. But it's just standard where you open it. That I'm fairly confident that as Bitcoin scales and commercializes, I don't necessarily see any way that it can't happen if we want Bitcoin to be global money. That there will be a standard that people will just use and it will just work and it'll provide the assurances of self custody without the friction. And so it's kind of tongue in cheek, but also kind of like an honest look at where this goes, because the common question, and I've been thinking about this graph I want to show, which is self custody, third party custody on each side of like a Venn diagram, and then the middle. And you could put like phones and Android, and you could put all the different examples of like, well, what sits in the middle, and like the iPhone sits and takes over the whole thing, and you have people on the edges. In the same way that like what we talk about with multi-institution custody sits in like across all of that, and then there's also the edges. Because the funny part is like the people we work with, I always joke and say the most sophisticated, like some of our clients have thousands of Bitcoin, some have less than a Bitcoin. But why would somebody with thousands of Bitcoin that's been self-custodying for 15 years come to us? It's because they are the most sophisticated. They had to go through all of that. And there's a part of self-custody that doesn't get talked about. The two big ones are physical security risk, which will increase as the price appreciates, and nobody wants their family to be harmed. And then the other one is just access to financial services, because if Bitcoin's money and you need to be able to leverage it in certain ways, you have not only inherent friction with not having access to it, but then if you go get access to it in that future world where everyone knows you're holding that Bitcoin, because that exists today, in the future it'll definitely be apparent. You just follow the person, and it's not hard to know where people keep their keys. Like we've been doing this for 10 years. Like if you're talking to a businessman, it's usually in their office safe and then in their home, and sometimes they keep it all in their home. So then you have your own issue there. And it's just not, I think like the technical aspect is only one core component of when you look at it like a full mosaic or prism of what is Bitcoin. How do you think about it when somebody's going to protect their wealth? You have to like actually soften all of them, because if you just get one, it doesn't necessarily fix the problem of what they're looking to do. A great example is multi-jurisdictional, multi-vendor, multi-sig. If Coldcard happened and you did that with all three, A, you don't have access. B, anybody could be messing with the seeds or the hardware devices when you're not there, because that's an attack surface. And then D, or wherever letter I'm on, is like, well, what happens if there's an exploit, right? Because there was people during the Coldcard stuff that were calling their friends, breaking into houses because they needed to get in to go withdraw the assets because they were nowhere near the device, right? It's a real problem. It's a paradox, because if you do it right, it's nowhere near you. But if you do it right, that's also a problem, because now you don't have access to it. It's where I ran into my own buzzsaw with collaborative custody, because I would travel, and it's a problem if I fly with hardware devices. Well, that's not good. And if I don't fly with hardware devices, then I left them somewhere, and who's somewhere, and what are they doing with something?
That's a good point. I don't know if like I'm obviously extremely bullish on self-custody, but I just see most people leave it there where they bought it. Like most people are buying the Bitcoin and just leave it there where they originally bought it and have it there for a very long time. And especially now that less things happen with exchanges, I think also like exchanges will like try to prevent more things, and people already trust banks. I don't know if do you think the biggest thing will be away from exchanges? Because right now, I think, I don't know what the percentages are, but like a lot of people have their Bitcoin on exchanges. I have no data on that, but I don't know. Have you data on that?
Yeah, for sure. I mean, I can pull up a chart that gives you the exact breakdown. It's surprisingly, and this is what I was telling you about institutions, it's surprisingly more sits in self custody. You can see where, active supply and self custody is closer to 40%, with custodians roughly 22%. And that's more of like Coinbase custody versus like what sits on exchanges, somebody leaving on Binance, and then funds and ETFs. The way I would explain what you're asking is, there's a good quote from a friend of mine. He references the dollar trades short-term stability for long-term volatility, and Bitcoin trades short-term volatility for long-term stability. And so, we naturally know what that means when it comes to volatility of the asset, even though it hasn't been as volatile the past couple of years. But it's similar with like, or what that is also explaining is the dollar system. Because when you look at like debt, right? Oh, wait, we don't allow things to delever and the market to get flushed, because it'll take everything down. So we continue to reflate, and we're papering over, and we're kicking the can down the road. And I think of Bitcoin years and months and cycles is very similar to that, because what you're describing is, it actually isn't rational for people to leave their Bitcoin on exchanges on a long enough time horizon. And there's two reasons why that doesn't happen. And we see this empirically with like just the data on self-custody, or so one is that over time exchanges get hacked. So Bybit was a great example. So as exchanges get hacked, because the idea is that if Bitcoin private keys are just data, and data on a long enough time horizon wants to get out. It wants to be free. You see this happen across everywhere. No shortage of PI, hacks, leaks across the world, especially with AI. So the basic premise is that on a long enough time horizon, exchanges, banks, custodians are being hacked, different sizes, and people are like, well, wait, I can't have that happen to me. The other thing happens is, independent of that, once somebody gets to material, this is the key thing that I think we often forget on like the nuance of custody, is it's fundamentally different to think about, how do I hold an asset when I have 0.1% or 1% or 2% of my wealth versus 10 to 20 to 30%. So think about, if I'm holding 1 to 2%, I'm speculating, right? So I treat it in a speculative way, and I park the asset in a speculative way, like screw it, Coinbase, wherever. But if you get to 10, 20%, whether your confidence grows and you buy more Bitcoin, or the price appreciates, remember I'm saying with time, so the price is appreciating, and now that 1% is 10%. If somebody bought Bitcoin, unless the past couple of years, but if you bought 1% of your net worth in Bitcoin, it got to 10% over time because of the price appreciation, scarcity. When that happens, what is the logical thing to do if you're holding this thing? It's what everyone did when they got into Bitcoin. Everyone just has a different cycle and time of how much they ape into it or move more of their assets. It's, well, what the hell is this? What is it? How do you custody it? Why is it getting hacked? Where does this go? Do I sell? Do I buy? And when you go through that progression, the logical conclusion is, I cannot have a single point of failure with this, i.e., I cannot leave it on a third-party exchange. The third-party exchange phone, between the phone and server, could be hacked. They could be hacked. They could not just like you tomorrow morning, right? There's all these different things. So I just fully believe that if Bitcoin is to scale and be successful, that will happen. And people will lose assets in the same way people that are going into ETFs and custodians. I hope they don't. But law of large numbers is, we will see, another loss in some respect somewhere. And some of those assets would have probably came in from this migration of self-custody because of fear. And the problem with third-party custodians and getting hacked is those numbers are just insane. Like the email I was sending last night to a large custodian was Bybit. Bybit hack that happened in 24, I believe, maybe 25. It was the largest theft in human history by like orders of magnitude, $1.2 billion.
That's really crazy, actually.
And so like, that's the thing that I think we forget about, is we've never had a digital bearer asset monetized in real time. At the same time, we've never had AI proliferating. That's like the big, I think if I had a bone to pick, is that, we talk a lot about, you're seeing more and more people call out groupthink And that is one of the biggest issues that I would say probably just a societal thing, because nobody wants to get kicked out of the tribe, right? So and this is human instinct, so you kind of go along with what the cool kids are doing. And we saw this with the Coldcard stuff, because when you think about how many people, if you helped anybody move assets, I would imagine you probably are on calls or something like that. Everyone knows they were talking to somebody that never sent a transaction from a Coldcard. They couldn't figure out how to do it, but somehow this device was the gold standard. Well, it's like, well, what? You can't be both, right? So there's something happening there. And so I think that we're just continuing down that drum of like, well, nobody wants to acknowledge, because the mental model we grew up or built upon Bitcoin is self-custody is always going to be the thing. And nobody has had the incentive or the discussion point to say, well, what if it isn't the thing? What if it isn't the thing that scales Bitcoin? What if it's not rational? What if it's not logical? What if there's a third way? And I think that really comes into emphasis in 2024. Because if you look at all the different things, you can make the case that we're okay. But 24 had two big things. The price appreciated, at the same time, AI started to proliferate. Right. And you see this in the crypto world, where they're always further down the risk curve with how they treat the asset. So it's just closer to the internet. But that's where I think it's just a big thing. And the market will sort itself out. I'm confident in that, because like Bitcoin's like water, in the sense that it'll go to the places that are where it's supposed to be, with the least risky. It'll just take time. We're so early in Bitcoin's monetization that I liken from the PC era. Computers didn't really start getting mass sent out until the early to mid 80s. That was kind of when Microsoft, Apple was really getting going. And I think we're like mid 70s at best, where everyone's still arguing about like, how the hell do we use this thing, and we're trying to figure out what's the motherboard, the hard drive, etc. But if Bitcoin's going to scale to be commercially viable for billions of people, there has to be a third way. And it can't be trust a custodian with all my net worth, or trust this hardware device and become the security expert.
I love that. It's actually a crazy thing to think about, because we've lost so much. What was it? 1.5 million Bitcoin lost in exchanges, and about 1.5 million Bitcoin lost in it on custody, like with different losing the Bitcoin and all of those things. Also, Coldcard in India. By the way, I just want to mention how small Coldcard incident has been compared to all the other incidents that we had. I think the main reason why people are so why there was so much coverage of Coldcard inside of the Bitcoin community, because it's hit in the heart of the inside of the Bitcoin community, and so many of them. And previously, if we think about like FTX or like Celsius or like things like of those natures, the hardcore Bitcoiners always said like, yeah, if you leave your Bitcoin there, it's your fault. Like it's you deserve to have lost your Bitcoin there, because like why would you put it in those platforms? Now with Coldcard, that was like, most Bitcoiners have recommended it. Most Bitcoiners are like very like, that's a gold standard. It's a security thing. And I think that's why, I don't know how it came up in my mind, but that's I think why it hit so hard, even though it's just 1,400 Bitcoin or something like that. If you compare it to like Celsius or Mt. Gox, it's like nothing compared to that.
Yeah, and I mean, in some ways it's smaller, in some ways it's larger, because to your point, there's multiple facets to the Coldcard. One of the biggest and the most heartbreaking is those were the individuals, when you look at like any of the podcasts from the analytics on the losses, they were just sat stackers. There were people that did everything right. They hadn't moved UTXOs in years, and they lost their life savings, or at least a portion that they were putting into Bitcoin. And you take that, and then you take, to your point, the people, this is where I said the group think, and that we're so early, we haven't figured out Bitcoin, because the mental models and the way that this industry's flourished or grown is there's thought leaders and people that got into Bitcoin in 2012 and have been talking about how they understand Bitcoin's going to scale and how people will adopt it. And their mental model is just adopting Bitcoin in 2012 and haven't checked their priors. And a lot of people follow it. So now it's like, okay, well, if the most ardent, supposed to verify, not trust people were duped, what does that mean for me? What does that mean for custody? What does that mean if the gold standard could be manipulated? or exposed, what does that mean for the rest of custody? So I do think that in some ways it's worse because it kind of changes it. But I think like to your point earlier, I think it's not necessarily it's a good thing. It's just everything's good for Bitcoin in the sense that people are going to have to reassess this. And we haven't even seen the fallout. Like I think the AI stuff will continue. I think that we'll have more physical stuff that happens. We're seeing it because there's so much data out there on who holds this wealth now and where they live. But what I mean by the fallout is as the price appreciates, people are going to get out of self custody. I can promise you, and they're going to go to other things. I've seen this happen because, like, let's just say you have one Bitcoin on a Coldcard queue that you're like, it's not exposed. I have a passphrase. You probably still should get it off, but let's say you left it on there. When that price does whatever we said it's going to do, whether it's 6 months or 6 years from now, that person logically, it doesn't make sense to leave it there. Right. In the same time, if somebody has 10 Bitcoin on a Trezor or Ledger and they're like, oh, I'm not hit here, but oh, my data was leaked. Oh, X, oh, Y. And the price is appreciated. And it's, again, not in a vacuum because in 5 years, that person has 3 kids now and their father may have passed away. So mortality is real. And they realize, oh, I'm doing this for somebody else. And it's like, I'm not good. And like down the street, they robbed that guy because they found out he had Bitcoin. Why, you see where I'm going with this? Like it's put the splinter into the mind that, and it should have already been there though. Like that's the main point is the splinter should have been there because there is always going to be something else that will leave more to be desired from all of your wealth and self-custody. Because I think that's also the nuance is that nobody in their right mind tells somebody to take all of their gold or their cash and put it in a duffel bag and put it next to their kid's bed. Right. Being a little hyperbolic, your Coldcard ideally is not like your kid's bed, but it's probably a door down. And so when you have 5%, 10% of your wealth like that, that's rational. That makes sense. You don't get knocked out of the game. You don't have anybody that can control it. Maybe it's you increase it, you decrease it. But I think the core idea is that the people that were saying Coldcard were the same people saying put all your wealth in Bitcoin and put it there. And that is just irresponsible when you think about it long term.
So fascinating, the whole custody solution, and I think we covered it quite well before, as you said, with the how self custody will get in the future. I also love your analogies with like the left and the right extreme and the Venn diagram. It's in the middle and it will expand because it's the one solution that everyone is using. I think we'll get to that point, and I hope we'll figure out self custody so people feel safe with their Bitcoin. It's actually a big thing that I see more and more people tell me of, like, oh, well, like, how do I buy it and how do I hold it? And they have so many questions around that. And then you start talking with them about signing and seeds and like, okay, wait, those 12 words. I literally had the conversation, I think 2 weeks with some friends of mine. They said like, wait, so you can have just like 24 words and those are your Bitcoin? And then they're like, okay, but can I not just like use any of the 24 words and then steal someone else's Bitcoin? Then you have to talk about randomness and all of those things.
I'll give you a mental model I've been playing with. And we also have to get you set up. We can comp you account so you can play around with what we're doing. Because there's like an elegant thing we don't even market that well, which is people can buy and directly deposit into multi-institutions. So on-chain verifiable, secured by 3, controlled by you, but you don't have to worry about any of that. And it just settles on-chain insured. Because I think that's its own issue, right? If you buy somewhere and you have to move, everyone, including still today, we can be in Bitcoin 10 years. You're sending a Bitcoin, 10 Bitcoin on an alphanumeric string of characters. And you're like, oh my God, when you hit that send. But here's a maybe to round out on a mental model. The way I think about all this is like, there's 2 different towns that you can pick to live in. And there's actually like 3 now that I'm thinking about it, but like there's really 2. It's you can live in a complete anarchy, no rule of law, no firemen, no police, no doctors. And there's negatives, right? But there's some positives. Or you can live in a traditional town, pick your like nice town that you live in somewhere in the West, wherever it is. And it has hospitals, it has physicians, it has policemen. They come when you call them. It has medical, fire department if something burns. And that's great, but it comes with trade-offs. You have to be a functioning member of society. You can't do everything you want to do at all the times. And so we naturally know where people normally would want to live. But as you go down that comfortability stack, you think about you live in that town and you start to have children and you start to worry about your family's security and your security. So you can become sovereign. You can move outside of the city. You can live on land. You can buy a gun. You can buy 3 guns and you can train your boys to know how to use them. That's how I think about like what we build and how I think this actually scales is you give somebody the town that provides the assurances. It has trade-offs. It's not complete anarchy where you can do anything and everything. You're not alone. And then as you grow in education and as you grow in perception and understanding of risk, then you can start to bring these firearms home and you can start to train and you can start to use them. And maybe you get a whole militia and you move to the anarchic town. Maybe you take over the town, right? Like, but you see where I'm going with this, that like right now, the way we explain self-custody to people historically pre-Coldcard is the most ardent believer to be like, don't trust anybody, go buy a Coldcard. And we're effectively saying, here's an AR-15, go defend your life. Like that's what it is. And people can do that if they have insane intentionality, but most people are not there. And so most people bought the AR-15, which is the Coldcard, and then, they kind of like, shot themselves or shot somebody else.
Yeah, it's a good point. Really cool. I just saw that time and I saw that I only have 4 minutes left. So I have one topic that I completely forgot to mention, the BIP thing, but we'll cover it some other time when you come on. Maybe there's been then new developments that we can cover with a potential hard fork and all of those things. Let's get to the end routine. As you know from previous appearances, we have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest is. And the previous guest asks you a really interesting question. I love that actually. What is the last thing you learned outside of Bitcoin?
The last thing I learned outside of Bitcoin probably related deeply to AI stuff, everything that's going on across the board, like how the whole stack works, from energy to compute to thinking about how this whole thing's going to scale.
Yeah, AI is, man, it's, I think if I wouldn't have a Bitcoin podcast, I would have an AI podcast. Maybe also something else, but like AI is so ingrained in my life. And I sometimes think about it, how much AI I was using 2 years ago, which is like almost none, like directly. And now if my Claude account is saying like I reached my limits, which I constantly top up, but if I said I reached my limits, I'm like, what do I do now? Like how do I function as a human being now? But anyways, thank you so much, Michael, for being on the podcast. Before I let you go, where can people find you, on-ramp, on all the things that you're doing?
Yeah, you can find us on bitcoin.com for a few weeks until Labor Day. You can get started now for as little as $100 a month if you use basic, so you can get an account. And then if you're not even ready for that, you just want to stack Bitcoin, no cost DCA, we have our new finance product. And then on Twitter, you can find me Tanguma there. Reach out, DMs. We've had no shortage. It's pretty crazy. We do a lot of client testimonials that are like, you can see the videos on our feed or mine. But the amount of people that have just like either moved assets or just reached out were like, I was able to sleep at night. I'm so glad I moved money over. So that's what makes this all worth doing. And appreciate you having me on.
A good night's sleep with a good custody setup is worth a lot. If you hear about Coldcard news or Bitbox news or any other news, and you can just close the phone because you know your Bitcoin is safe, I think that's a state where we should get there. We should not have to worry about our life savings. Thank you so much, Michael, for being on. Thank you so much also for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.